Hey, let's talk a little about the stock market. Because of what's going on, the oil price and, the war that going on and off, hopefully it will come to an end soon. The market tend to have some fluctuation and it gets some people nervous. But generally speaking, in July 2026, this year, the S&P 500 and the Dow Jones, they experience minor headline driven, and it's driven by, the volatility of the market, bounce back from early month dip, and it's caused by, the situation in the Middle East, the tension that's going on. But generally speaking, the month of July historically is one of the strongest months for the stock market, right? So, what happened? We generally should just keep our focus, right? Soon company will start to issue their quarterly earning. If a company continue to show good profit, then the market will go up. That's solid reason to keep growing. If not, the market will go down. But generally speaking, the stock market is on this basis of fluctuation. It's up and down. It's like you're climbing a mountain, but before you reach the top, you have to go a little over some hill, down in some valley, over higher hill, down in some valley, but you're going up. You have an upward trend, because it's work with supply and demand, right? So, the more people buy shares, the more stock go up. When people start to sell, it's go down, right? That's the way it is. And a lot of time, this happen with the fluctuation also, not just about the war, right? It's come with a lot of time that the interest rate, sometime the central bank may raise the interest rate, sometime they may lower the interest rate. Is go with inflation. As we know, the cost of living and business expenses keep on rising. That's part of the inflation. Economic health. A lot of time it's go with the job report and sales, retail sales. They really count that, and the overall economic growth. That's how these things help it to fluctuate. The stock market generally driven by human psychology. If people panic because of the world news and the war and the political changes and the climate, guess what? They rush to sell their stock. And that's caused a lot of these ups and downs. So generally speaking, it's the psychology of it. What's going on. But in the last 30 years, the stock market averaged 10% plus. Think about this, in the last 30 years, the average savings account is 0.5 to 1%. Which one you're more likely to put your money in for the long term? And remember, the stock market is really deal with long term. Not just you want to put away some money and next month or 2 months or even next year. It's your long term growth. So when you're seeing a fluctuation, you have to know that generally speaking, this is short term. For the long term, it will always grow because this is proven. Fluctuation up and down, but it's always growth. But if you just measure, there's no comparison to what you will get in the bank. But always remember, it doesn't matter the investment, market up and down. It is no guarantee that the market gonna always, like the last 30 years, I just talk about 10%. There's no guarantee. It can go down. It can go down more than that. It can go down or it can up. But one thing you have to have in mind, the past performance is not really indicative that the future going to be like that. So you always have to be careful. But you still want to talk to a financial advisor, financial planner, do some research. But guys, don't let these ups and downs hold you back from keeping your asset growing, because you're in it for the long run. Okay, guys, take care. Give me a shout out, give me a like, give me a comment, give me a share, and subscribe.